And we are live! Welcome for this weekly live stream on the latest and greatest news in Ethereum and DeFi. Today we will be talking about the Uni token yield farming, DeFi Pulse Index, and a major crypto exchange that becomes a bank, and much more. We'll do the Q&A at the end as usual. For those who don't know me, I'm Julian, your host, and on my channel Eat the Blocks, I teach DeFi, blockchain development, and how to find your first blockchain job. And before we continue, quick shout out to my two courses. If you want to become a blockchain developer and make 100k a year like I used to make, register for my course Six-Figure Blockchain Developer. And if you want to learn how to make arbitrage flash loan, check my other course on flash loan. So hi to the people in the chat. Hi Nick, hi Jaywood, hi Jan, hi Thomas, hi Siam Tanda, hi everybody. It's great to have you. Where you guys from? Tell me in the chat. So we will start with the prices of Ether. So it's a bit flat this week. It's a bit boring. But it's not too bad because stocks are a bit down in comparison. So yeah, nothing special here. I hope we'll be back to the 400 level very soon. Yeah, so the situation on the gas fee is very important to keep an eye on this because currently that's one of the main problems of the Ethereum network. So unfortunately, we are back to crazy town with super high fees. It's probably related to all this Uni token yield farming that happened on Uniswap. So that's the explanation for the gas fee. It's not ideal. I really hope like we're gonna get back to like 550, 100 goe, because with this is really difficult unless you trade for really big volume, like people who do yield farming. They do like who successfully yield farm, like they put like 5k, 10k, 20k. But if you just do like 1k or $500, it's gonna be a bit tough with this really high fee. Alright, so next let's have some news about Ethereum. So one of the core developer of Ethereum, so Ethereum 1.0, not Ethereum 2.0, so released a paper in which he said he believed that we can scale Ethereum by 10 times without any sharding, without Ethereum 2.0. So so far it's just one researcher who said this. So we probably need other researcher who bring in 2 cents just to validate his thesis. But if it's true, that's really big, because that means that before we get Ethereum 2.0, we could have some substantial scaling gain on the Ethereum blockchain. So, and that could really of course decrease a lot the gas fee. So let's cross our finger and wait and see what happened here. All the news about Ethereum 2.0. So this is an article posted by Danny Ryan. If you're into Ethereum 2.0, Danny Ryan is someone that coordinate and make the synthesis of a lot of different information. So what he posts is always very interesting. So if you've been following Ethereum 2.0, you probably heard of the Medalla testnet. So that's a testnet where basically they were trying to see if all the different clients for Ethereum 2.0 were working well, and they have been mostly successful, except that at some point there were some synchronization problem, but it was resolved quite quickly. And so now they are talking of launching another testnet that will be short-lived. So they call this the Spadina testnet. So this is going to be short-lived. It's only going to be 3 days. And so this testnet will be closer to mainnet. So it will have the same parameter as testnet. So in other words, really, this is the last step before we get the launch of mainnet for Ethereum 2.0. So that's super bullish for Ethereum. When I talking of Ethereum 2.0 mainnet, this is not the final version. So there are different phases, and for phase 0, we won't really be able to use it. I believe we'll be able to stake already, but that's it. There'll be different phases. So That just means this is one step on the roadmap for the final release of Ethereum 2.0, where when we can actually use it, this is probably going to be in 2021 or 2022. So let's not get too excited, but still a little bit excited. But it's probably going to be bullish for the price of Ether, that's for sure. All right. So next, we're gonna talk of the market cap of DeFi. So let's go to my favorite website, DeFi Pulse. So we are at almost 9.8 billion. So that's 1.35 billion more than last week. So it's very good. As you can see on the chart, it's like almost vertical. This is really amazing. And so the rebound kind of continues. So that's good. So if you remember, when the stock market went down a couple of weeks ago, we had this sharp decline, but quickly we went into rebound mode. So that's really cool. And actually, if you switch to the view in Ether, the rebound is even more impressive. So that's very, very cool. In terms of the project, so Uniswap is almost back to the first place. And if you check its market cap, then you can see that it has recover all the liquidity that was stolen from Sushiswap and more. Meanwhile, for Sushiswap, let's see what happened for Sushiswap. Sushiswap, where are you? Number 10. Wow, Sushiswap went down a lot. So Sushiswap started to lose liquidity, and I'm really not surprised about it. They totally lost their credibility with the whole Chef Nomi screw up. So that really shows you that you can't just do a copy paste of Uniswap and expect like to become the next Uniswap. That can give you some initial traction, but if you don't really inspire confidence, then very quickly you can lose the liquidity that you take. So yeah, I mean, I think this is really well deserved. Uniswap, they are like way more credible than Sushiswap. So yeah, that was interesting to follow this story. Alright, so now let's see the market cap for the top DeFi token. So let's see this in CoinGecko. I love this page for the top DeFi token. So everything is done. Look at this page. Red. And with 2 digits most of the time. Wow, this is really scary. That's kind of weird because the market cap of DeFi went up a lot. So yeah, I mean, maybe this is really a good buying opportunity, you know. Yeah, so that's it for the prices of token. Oh yeah, so here you have a graph on Twitter where you can see that most of the tokens are down 40% from their 30-day high. Yeah, so BZX, yeah, minus 87%, like a real disaster. Sushiswap, wow, I mean, you better sell your sushi right away, huh, because it's not worth a lot. Huh? Yeah, you can see like some food DeFi token. Like you can see the token is really down. All right, so I mean that's life, you know. Like DeFi is super volatile, so if you accept it can go up a lot, then you gotta be prepared for the whole ride when you go down. All right. So now let's have a quick look at the rate. So I see many people, they never have a look at rate, but you know that's a mistake, because even though you can make a lot of money with the yield farming and all the crazy degen stuff in DeFi, you can also make money simply by lending your money in some exchanges like Compound, etc. So yeah, it's always important to keep a look on that. So for example, here with DAI, you can get 5% on Aave. Yeah, it's not too bad. DYDX 3%. Yeah, well, 5% on Aave, it's not too bad. And as usual on Fulcrum, I don't know why we have this crazy rate. If anybody know why we have this crazy rate on Fulcrum, I'd be really curious to know. Maybe that Fulcrum does uncollateralized loan. I don't know. But that seems crazy to me. We can have this rate. All right. Then we're going to continue with the news on different DeFi projects. Alright, so the big news this week is that Uniswap has introduced a governance token, so the Uni token. So with this token, you can govern key protocol decisions, except for the control over the treasury. That's smart. Huh? I don't want to give access to the money. Huh? But actually at some point with the Uni token, you will be able to vote on the treasury. So, but this will be delayed until October 17. I mean, I guess it kind of makes sense, you know, that it's kind of scary for them to open up like this. So they want to stage how they do it. So the way these tokens are going to be distributed is in two phases. So first you have the airdrop. So anyone who interacted with the Uniswap protocol since its beginning, everyone received 400 Uni tokens, and at the time when it was released, that was equivalent to $1,200. So since that date, it changed a lot. Yeah, so I think it almost more than double, and now it's going down a bit. But yeah, at the beginning it was 1,200. So I mean, it's kind of a stimulus check by Uniswap, you know, so that's really nice. And these tokens were distributed regardless of the volume traded. So if you're well, or if you're just a regular guy, you get the same amount of money. So yeah, I think this is really nice because that's really the first time we see that kind of distribution. There were more than 50,000 addresses that are holding Uni token after just a day after they did it. So it's already higher than addresses holding Maker and Comp tokens. So this is the first phase of the distribution, but there is a second phase which will be the liquidity mining. So anybody providing liquidity in Uniswap will receive some Uni tokens similar to what we have seen in other protocols. So this is going to be restricted to 4 pools: ETH USDT, ETH USDC, ETH DAI, and ETH wrapped Bitcoin. So liquidity mining is proportional to liquidity. So the more liquidity you provide, the more Uni token you will receive. And it seems to be a fixed amount per pool. So you will get more tokens if you provide liquidity in smaller pools. So for the token allocation, I think they have a nice graph. Yeah, we can see it here. So total, there will be 1 billion Uni token minted. The initial airdrop represents 15% of the total. The rest will be put in circulation over the next 4 years. So there will be 60% that's going to the user of the community, 21% to team member and future employees, and 17% to investors, and the rest to advisor. So everything which is given to investor and employee will have a vesting period of 4 years. So that's good because that guarantees us that they will not dump their token on the market as soon as they receive them, unlike the infamous Chef Nomi. So yeah, that's quite bullish for the Uni tokens. So let me give a bit of context here, because Uniswap was criticized for raising 11 million in its latest investment run from a big VC funds in the Silicon Valley. And why were they blamed for that? Because the critics said that makes Uniswap not really align with the community interest. So Sushiswap leveraged this sentiment by saying they haven't raised any money from VC, and that was a little bit the marketing line. And so I believe that, so of course, the fact that Uniswap introduced the Uni tokens now is obviously a response to Sushiswap. They saw all the liquidity going away, and they had to react quickly. I think that initially they planned to release the Uni tokens for Uniswap v3, but because of what was happening with Sushiswap, they had to make it happen faster. So as I said before, we saw all the liquidity taken away by Sushiswap return to Uniswap. So that means what the response of Uniswap was really good. It was very successful. So I think this is very, very bullish for the future of the project, because that was a test. That was a big test. Some other project tried to attack them, but they were able to figure it out and find a solution. And you know, we want to have this test. Like, if this is just a smooth sailing and nothing happened, how can you be sure that when there is a problem they will react well? So yeah, I'm happy there was this test and they passed it. I mean, if you want to make a comparison, same thing for the Medalla testnet. There were some problems during the testing, and that's good. We want to have problems and to solve them. Otherwise, we don't grow at all. Okay, so good news for Uniswap. So next news. So DeFi Pulse introduced a DeFi index, so the DeFi Pulse index. So that's a capitalization weighted index of 10 popular DeFi tokens. So you have Wi-Fi, LAN, SNX, Comp, Maker, BAL, and other. Actually, you have the full list here. So capitalization weighted, that means that it's constantly readjusted according to the market cap value of each token. So for example, if Wi-Fi represents 10% of the total market cap of all these tokens, then this must be reflected in the index. So in order to build this index, they use the SET protocol. So the SET protocol, if you never heard of that, this is a really cool project. So it didn't get a lot of exposure recently, but it's a shame because it really has a lot of potential. So with SET, anybody can be a fund manager on the blockchain. SET protocols call each of these funds a set. So there are two kinds of sets. There are sets that are managed by the SET protocol itself, and there are also sets that are managed by third party, like the DeFi Pulse index. So with this DeFi Pulse index, this is a very, very easy way to invest in DeFi without having to risk everything on a single token. So in terms of risk management, it's really good. And it's also a great way to minimize gas fees because you just need to pay for one transaction to buy the index, and after the index, that's the rebalancing itself. So you don't have to cover these gas fees. And in this context of super gas fees, this is super important. So if you've been on the fence about DeFi, you're really excited about all this crazy yield, but because of the Ethereum gas fees, you really turn off. I mean, that might be a good opportunity to finally get started. And by the way, anybody, like I said before, anybody can create a set on the SET protocol. So yourself, you could also be a fund manager. So really encourage you to check out the SET protocol. I think we're gonna hear more of this protocol in the future. All right. So next piece of news. So BZX managed to recover the funds that were stolen in the hack. So if you haven't followed, so BZX, this is a sort of a derivative exchange, so an advanced decentralized exchange, and so it had a very good beginning at the beginning of this year when it was launched, but it was attacked several times at the beginning of the year, very shortly after its launch, for a total amount of $1 million. So that was a very complex attack using a flash loan, and I think I covered this attack in one of my videos about flash loan on my channel. And after this attack, of course, the team of BZX decided to pause the spot contract, and so they went back to work to fix it. And so yeah, I mean, on top of it, they managed to recover the fund, so that's really nice for all the investors. All right, so next, so Kraken. So one of the big centralized exchange became a bank in the US. So that's really the first centralized exchange which managed to do this. That's really, really big. So it will not be a bank like other banks because it cannot have fractional reserves. So, like traditional bank, if you deposit $1,000, they don't keep $1,000, they just keep maybe $100, and the rest they lend it. That is how they make a lot of money. But of course, if there is a bank run, then that means you finally realize that they don't have all the money, so this can be a huge issue. So you will never have this issue with Kraken. So in terms of peace of mind, that's really good. So I think also this means that the importance of all the bridge between fiat money and crypto will progressively be less important, because now if you can just keep all your crypto in a bank and have it guarantee everything, you don't have to protect your private key, then I think we'll see more people keeping their money in crypto, maybe not in Ether, but at least in stablecoin. And I'm expecting more exchanges to introduce this. So really positive for DeFi. All right, so that was the news for DeFi. So now we're gonna go over the news for developers. So first, there is a context. So the underhanded context that is organized by the team of Solidity. And so in this context, you have to create a smart contract that look innocent but has some security vulnerabilities. So this year, the theme of the context is upgradable smart contract. So you have to make an upgradable smart contract that has some security vulnerability, but it's not at first look you don't really see them. And the main requirement is that in the mechanism it has to be flawed such that there is just a single account in control, even if it doesn't seem like it. So in terms of prices, let me see, where do they have the prices? So yeah, you have 1 ticket to DEF CON, you have some access to some paid developer tool. Yeah, but I think the best price is the ticket to DEF CON 6. Well, I hope that at that time the COVID epidemic will be over. So otherwise we're gonna have a virtual. No, DEF CON 6 is this year. No, it will be virtual. Yeah, unfortunately. So yeah, okay, so they show you the price, but to me it seems like the real price of this context is that you can. I mean, if you are selected as one of the finalists, you can show this off on your CV and you can use this as a leverage to get a higher pay, really. And I think this is also a great way to learn about security. So if you're interested, the submissions open at 1st of October and end of October, and the winners will be announced by the end of November. All right. So next, first release of Web3. So Web3, which is the most popular library to connect to the Ethereum blockchain. This is the first release since the project was taken over by ChainSafe. So ChainSafe, this is a tool for security analysis. And so for this release, they rewrote everything in TypeScript. So this will probably make it easier to use Web3 in TypeScript project. Why does this matter? It matters because TypeScript is more and more required for high-end front-end position. So it's a good news to switch to. It's a good idea to switch to TypeScript, even if personally I don't like the sort of extra complexity it brings, but career-wise it can really bring some benefit. Next, so create ETH app. So that's a tool that allows you to very quickly bootstrap some decentralized application projects. So they added support for Web3 model. So Web3 model, this is a project I think I covered in one of my videos. This is a project that allows you to very easily integrate many kind of wallets. So not just MetaMask, but you have access. I think it covers like 5 or 6 wallets. So yeah, that's very good to make your dApp compatible with all kind of wallet available. So good news. And finally, I wanted to briefly mention this project Ethers RS. So that's basically a port of the Ethers library. So Ethers, this is a little bit similar to Web3, but this is like an alternative to Web3, allow you to connect to the blockchain. And so this is a port of Ether, but in Rust. If you never heard of Rust, this is a low-level language that is becoming super popular. It was created by Mozilla. And now it's being used more and more as a sort of replacement to C++. So this can be useful to do some Rust, to use Rust for blockchain if you need to do something with high performance. For example, if you want to do some arbitrage on the blockchain. However, you have to know that Rust is way more difficult than JavaScript, because you have to declare all the type in Solidity, but also you have like a lot of very advanced concepts. So this is really not for the faint of heart. If you have a background in low-level languages and you are curious, you can check it out. But if you're a beginner, I really don't recommend to check out Ether Rust. All right. So now finally we're getting to the Q&A. So let me just quickly repost the link to my 2 course, 6-figure blockchain developer to learn blockchain development, and profitable flash loan to learn flash loan arbitrage. All right. So now I'm going to scroll up and see what are the question and answer all the question in order. Okay, so hi again to people haven't greeted yet. Thomas, Philip, Jay Nelson, wow, Fox. Wow, we have many people in the chat today. This is amazing. All right, so someone asked me why market is down. Market is not really down. It's slightly increasing. I would say stable, slightly increasing. All right. Philip said this is definitely pre-recorded. Market is way down. It depends. No, I mean if you see the 7-week average of Ethereum, like I show you, this is not down. I mean maybe today it's down, but over the week, no. Okay, so how ZK rollup affect fee? Well, zero knowledge rollup. This will allow to offload some transaction on layer 2, so this will reduce the transaction fee, of course. Also, someone say, oh, it's funny how I say, oh, you, it's like THX, like the logo from the first 6-star movies. Oh, okay. I guess this is a private joke between me and THX. Someone say, Gold Jim, hello, how to fork Uniswap? Well, I mean, you're in good luck because this is the last one of the last video I published last week. So check out my video of last week, and I show exactly how to fork Uniswap. All right. Nice. Let me see. Sushiswap is just innovation in research on research in tokenomics. Yeah, I mean they didn't invent the yield farming. Uniswap feature is going to be game changing. Hold all those uni. Yeah, for sure. Yeah, I trust Uniswap long term. Uniswap v3 layer 2 sidechain. Yeah, like that's a prediction I've made a couple of weeks ago that we'll see more and more DeFi project moving to layer 2. Because yeah, I mean they understand that this is really an obstacle to more liquidity. So that's going to be interesting to see all this layer 2 integration. One thing that will be a little bit annoying is that we're going to lose composability. So if you want to do complex operation where you combine protocol A, B, C, etc., if we move a lot of this liquidity on layer 2, that won't be possible anymore, at least temporarily. All right. Let's see the other question. Ena, who said, I've claimed my 400 uni token. Yeah, great. J Root, who said, I claim 800 double. Woohoo! Ena, who said, got almost 6 ETH. Wow, this is amazing. I think 1 inch will also enter the token fight. Yes, but 1 inch is an exchange aggregator, so I don't really think they have the same kind of challenge for liquidity. All right. Will DYDX 1 inch platform will issue token like Uniswap? I mean, at this stage, this is pretty sure that most DeFi project will do some yield farming, liquidity mining. I mean, they saw that it works, and the liquidity war start to be more and more intense. So I don't see why they wouldn't do it for sure. We need Ethereum 2.0 ASAP. Yeah, but unfortunately, before it's finally released, it's still probably going to be 1-2 years because they don't want to rush things. Like if they make a big mistake and there is a bug on the mainnet in the future, that's the whole credibility of the Ethereum project that will be affected. So they prefer to be late, safe. Sorry, I mean they prefer to be late but safe than to rush things and lose credibility. All right. Let's keep scrolling down, see the other question. Proof of work is slow and expensive. Yeah, this is going to be proof of stake in Ether 2.0. All right. Sushiswap repo doesn't have updated source. Yeah, it's possible. I haven't checked out their repo. Not all projects publish their smart contract as open source, but you can use if they haven't published the source of their smart contract, you can use tools that are called disassembler to go from the opcode on the blockchain to the Solidity code. but I haven't used these tools. You can check out some security tools allow you to do this. So Crypto Gnome asks, hey, could you do a video how to do swaps using Uniswap on Ethereum? Yeah, it's already done. You can check out my one of my video on Uniswap. I think that was a couple of weeks ago on Uniswap V2. I explained everything, especially in Solidity, how it works. Cenobite asks, is it profitable to grab a Chainlink node? I haven't tried, but I think you can just stake some coin. I'm not sure you have to run a validator yourself. I think you can stake some coin to a validator, but I need to look more in detail. If anybody know anything about Chainlink staking, let us know. Fox Rayman, where is more money for dev, in trading or building? I mean, you can do both really. If you can build something that can be useful for traders, that can be very interesting. So that's actually what we do in my course on profitable flash loan. We build a bot that do arbitrage on the blockchain. So what you could do is, if you know, you can take the code of the course and turn it into a service that you monetize, for example. But you can also use your development skills to do your own trading. So you can do your own trading, you can build a service, or you can build something for someone else. So what's Vincent is asking, what's your forecast for the future of crypto as COVID is like an accelerator of digital transformation? So this is a good question. So I think it's so let me see how to okay, so first of all, it's COVID. It's going to put a huge pressure on the job market. So I think people are going to start to search for other ways to make money, and of course crypto is one of them. So they're gonna invest in crypto. That's really the first step. But second step would be to be a blockchain developer. So that's the link I would see between COVID and blockchain. You will put more people in difficult situation, and they will see blockchain as an opportunity. Also, we might have a high inflation in 1 to 2 years with all the money that was printed. So it will drive even more people to crypto. So that was a pretty long answer. Okay, KMC is asking, what will happen to DeFi space if Tether collapses? That's not good. I'm not sure what's the market cap of Tether. Is it the biggest stable coin? I believe so. That would be really bad. But this is not the only stable coin that will definitely not kill the DeFi space. And I know there was a lot of controversy over Tether, but really in the end, it never really collapsed. So I think it's just too much conspiracy here. Jay Nelson asking, how do you feel about the future of Solana? If you were starting a new DeFi project, I haven't followed Solana. Is it a layer 2 solution? I don't know that one. Neraj asking, if you're building a DEX now and plan to release by January or so, would you recommend ETH 2.0 over Ethereum 1.0? It's too soon. Don't worry about this. Just develop over Ethereum 1.0. Ethereum 2.0, this is in terms of for the blockchain developers, you will be concerned about this in 1 or 2 years when it will be released in full. So right now, just focus on Ethereum 1.0, and on top of it, one of the goals of Ethereum 2.0 is to be backward compatible with Ethereum 1.0. So most of the smart contract you build for Ethereum now, they should also work in the future. So don't worry about this. Just use the tools you have now, and you should be fine. Thomas Franklin is asking, when is your advanced Solidity course dropping? So it's a really good question. Okay, so I have some bad and good news. So the bad news is that I haven't made really too much progress there because I started to do something and I wasn't happy of what I've done. I wasn't inspired really. So I took a step back and I felt like it's going to take me more time to build this course because I really want to build something great. However, in comparison, there is another course I wanted to do, which is a course for DeFi programming. And for this course, everything is already well defined in my mind. I know exactly what I want to do. So I'm still considering it, but I might switch the priority and decide to release the course on DeFi programming first and do advanced Solidity programming after. I'm going to do a poll to see what's the priority, what people want first. But yeah, so that's the situation on the course. Crypto Gnome is saying using Python. I recommend to use Node.js and JavaScript. Really, it's really the most compatible. Python, you can only use it on the backend. You can use it on the front end, so you have to do context switching all the time. So also you have decent support for blockchain and Python, but you have even better support for JavaScript and Node.js. So really, make it easy for yourself. Use JavaScript. That's the easiest. Ina says, I say, great work done here. I will enroll your Flash Loan course very soon. Great, Ina, looking forward to have you. Crypto Gnome swaps on Ethereum using Python. No, use JavaScript. Someone is asking if the blocks ZK rollup and Ethereum 2.0. So ZK rollup is a scaling solution for layer 2, and Ethereum 2.0 is a scaling solution for layer 1. So these are complementary. But what's going to happen is all this layer 2 solution, they will fill the gap until we have Ethereum 2.0. So first of all, it's going to be only layer 2 that will save Ethereum for a while, and after there will be Ethereum 2.0, so we'll have massive scaling on the blockchain. And if we still need more scaling, then we'll have the layer 2. So there will be like 2 scaling solutions combined. So in the end, Ethereum will be massively scalable. Will the DeFi project be popular on Polkadot? Polkadot is just an intermediary, so I don't really see DeFi project being on Polkadot. I just see Polkadot being an intermediary to go between blockchain. Can you do some video on ZK rollup dApp? I could have a look. I'm not sure we have any framework that is ready yet, so I'm not sure if it's only something ready for researcher or if it's actually ready to be used in production. Fox saying Tether won't collapse as long as people believe this is worth $1. Yeah, that's true. I think we're going to be fine for Tether, but just diversify into DAI. Yeah, the only thing I didn't like about centralized stablecoin like Tether is I think this happened on USDC. A couple of weeks ago, they froze an address because that was related to some case of corruption or terrorism or something like this. So of course we always think, oh, like I'm not a terrorist, I'm not a corrupted person, blah blah blah. I will never have this problem. But still, I don't really like that using crypto and still have the disadvantages of centralized coin. Dear host, dear host, if you know how to write profitable flash loan, what are you making? Setting a training, just execute your profitable flash loan. No. So okay, so I'm gonna be very straight here. I think this is a very cynical way to see it. So I don't know if it's what I'm doing here on this channel is what I really enjoy doing is teaching people how to thrive on the blockchain, how to become a blockchain developer, how to build your DeFi project, etc. is what I like. So doing a profitable flash loan, it takes time, right? It really requires you to adjust, to make some adjustment, to try different things, etc. And this is not my job. I'm not an investment fund. I'm a teacher. I teach. So I teach you how to build a flash loan, but you probably need to make some adjustment. This is not like some copy and paste thing where I'm not selling a trading bot. This is different. I teach you the process of building this. So if you're someone, you just want to make some quick money, and you're not interested at all in building, don't take this course. This is not for you. This is a course for people who are really interested in the process, who are willing to put some effort, etc. We're not here on this channel. I'm not the kind of guy who will encourage you to to do like some to make you think you can make a lot of money easily by doing nothing. No, you have to make some effort. You have to earn it. That's for sure. Okay, so let's see the other question. Does the Flash learn how to find the arbitrage opportunities? So this is a script. So this is not an organic process where you have to look yourself. This is a script that all the time check out the price differences between different exchanges. Yeah. So Uni crypto massively undervalued. Yeah, probably it's gonna go much higher. All right, guys. Well, I think we exhausted all the questions. Any more coming? No? All right, guys. Well, I guess this is pretty much it. So thanks everybody for coming here on the show, and I'll see you later this week for other videos on my channel. Peace.